Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the sterling versus US dollar, so let's get started. Price action last week took this pair sharply to the upside, where we found resistance sellers against previous highs through here. Sellers on Friday stalled the pair before rotating sharply to the downside into the close. And in trading this week, and trading yesterday, we came and we found sellers against the 100-hour moving average after breaking below the level. The market moved lower, admittedly moving below the 200-hour moving average. Should have sent the price further to the downside, but we did have economic data in the form of ISM non-manufacturing index, which came in much weaker than expected, and the price rotated back to the upside. But where do we stall? We stalled right near the 100-hour moving average. In trading today, the price started its move to the upside in the Asian session, and because of maybe nothing else better to do, the price tried to get above the 100-hour moving average, see what would happen on a break above that level. But as you can see, the momentum faded fairly quickly into the early European session. The price has since rotated back to the downside in this currency pair, and taking the price back below also the 200-hour moving average. It's a green line in this chart. So we're having the second go round this week below the 200-hour moving average, and traders will be watching this level right now to see if the price can stay below the 124.055 level and make some further headway in the downward direction for this currency pair. On the downside, we do have this swing area which had a floor type bottom right here, then broke below that level, failed, got a little choppy through here before reestablishing the area as resistance there before breaking back up to the upside and back to the downside and reestablishing support through here. And as I mentioned yesterday, the market moved below the 200-hour moving average and below this old floor area, which is getting a little bit wishy-washy, I think, with a lot of the failed breaks on the downside or the upside for this pair. But nevertheless, if the price would move below the 123.86, it's moving away from the 200-hour moving average and also getting below the recent or this swing area. So I would lean in that direction to see if that could happen, and see if you can get developed for any further momentum in that downward direction for this currency pair. Otherwise, a move back above the 200-hour moving average with momentum would put the price firmly in between the 100 and 200-hour moving averages, with failures on the top side and failures on the bottom side, defining what is a market that doesn't know which way it wants to go. So sellers are trying to make a play. We'll see how that pans out. Just take a look at the daily chart as a reminder. In trading in the month of May, the price came down to test the 100-day moving average. Also test the 50% retracement of the move down from the high price going back to 2021 to the low price that we saw in 2023. So the 100-day moving average of 50% retracement near the 123 even level. Just keep that level in mind going forward for this currency pair. If we see further downside momentum in it from the clues from the hourly chart, that is going to be a key level right down here. So be aware, be prepared. My name is Greg McCloskey. Good fortune with your trading. Bye.